Good afternoon, everyone. Scott G here with The Simple Trading Life, and welcome to our Tuesday edition of our live stream. So, welcome to everybody. Let me bring up your comments here on my phone. There we go. See, we've got a couple people in here already. You'll see where I just posted. So if you're new, if this is your first time, you can type comments in there, ask me questions. If there's something that we go over that you don't understand, just let us know. And we'll give a couple of minutes so folks can join us. As you can see here on my screen, I have ES, which is the E-mini S&P 500. This is what we always start with. It's obviously the overall market, which is very important, and we'll cover that in depth. As we're waiting for some folks to join us, I see we got a few in here already. As always, if this is your first time, this purple dashed line is opening price level. That's where we opened our regular trading hours this morning at 9:30 a.m., 2764.50. You can see what we did is we flushed down to support, back up to resistance, and then from there we had a nice flush down all the way from 2777.50, and we've been as low as 2717.25. So a $60.25 drop today. Then we caught a little bit of support right in through here. Made this nice little move back up, which we're going to talk about here very shortly. Hey, Infamous. Good to see you, buddy. And currently, it looks like we're trying to move back down, but we're going to see if this is a strong move down or if this is just a little bit of profit taking right here, and are we going to go higher? That might play out while we're on the live stream. So I see we got a couple more people joining us. We'll wait just a minute to get going here. Looking at the overall trend, you can see, and we talked about this in our private live stream in our premium community yesterday at thesimpletradinglife.com. As you can see here, we've been moving down. Okay, see this structure: lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Okay, so we're obviously trending down right now. That could change, or if you see this here start to go lower and we take out this lowest point, that just confirms that we're still trending down. Okay, we'll look at VXX here in just a little bit, Infamous. Let a few more people join us in the room here for our Tuesday live stream. Make this bigger again. So yesterday in our private live stream, we do those at least 3 times a week. So what we did is we were kind of talking about what was the likelihood of what was going to happen over, like, say, the next 24 hours or so. And, you know, I told them yesterday that just based on what we could see, and if we go back here, right, so that would have been over here, right, and then we started the new day. The new day starts at 6 o'clock every evening when we're talking about the futures, which is what the E-mini S&P is. Okay, so it started right here, but we were talking about it over here. Okay, we do our private live streams at the same time each day that we do these public live streams. So we start at 2 o'clock. So we started on that candle right there, and you can see we were already moving down. And basically what I told everyone was if we started to put in a series of lower lows and lower highs, then that would signal that we were going to start some downtrending action. And that is exactly what we have had. So this morning, when a lot of people on Twitter and different social media platforms were all talking about going long on ES, going long on SPY, going long on the Qs, QQQ. We were exactly the opposite. And as you can see, we obviously we called that right because we got this strong move to the downside as we always as we already looked at. That's a 60-point move to the downside. We're going to go over some of the things that were on our watch list this morning and some of the potential trades that somebody that was a member of our premium room could have taken. And you'll see that especially the Qs, that was one of them that was on our watch list, worked out very, very nicely. Hey Riz, I just saw your comment there. Good to have you in here, buddy. So yeah, we'll just kind of start going through some things. What I'll do is I'll mark some alerts like we always do. Let's put one right here. And then we'll put one just below there, and that'll let us know if ES starts to move. We'll put it just below here, and that'll tell us if we start to get any kind of movement on ES. Okay, so the first thing I want to do is I want to look at a few of the names that were on our watch list. And if you're brand new, you've never been here, when I say our watch list, I'm talking about the simpletradinglife.com. If you go there, you can learn about us, you can check us out. We have a free chat room and we have a premium room. So every morning in the premium room, what I do is I try to give some trade ideas to the premium members, things to look out for, and we have various criteria that we're looking for. A lot of it's based on price action. Then we also have something new that we started recently, which are called small account growth names. And what they are, and if you can hear lawnmowers in the background, I apologize. Our lawn service is here cutting our lawn right now, but shouldn't take them very long. They shouldn't be by this window for very long. So anyway, I put out a watch list each morning, and it's got various names on there based on a bunch of different criteria. So one of the names this morning that we were watching was the Qs, QQQ. So let me zoom in here. So as you can see, not only did we gap down, right? Here's the purple line showing opening price level. We immediately, other than just barely poking our head up, we immediately flushed away. And when I say we flushed away, the low of the day was exactly $7. And if anybody who trades the Qs in here knows, that is a strong, strong move on the Qs. Okay, so this is what we were looking for. We were looking for a downside move. And other than, like I said, just barely poking our head up right at the beginning, we flushed away. It ended up flushing down $7. I know at least one person in the room took an early part of the trade. They had to get out of it because they were going into a meeting and they didn't want to stay in a trade when they couldn't watch it or manage it, which is absolutely smart. Don't ever trade distracted. Okay, if you're distracted, you should not be trading. Even if you miss something like this, and he did, and that's okay. As long as you were green when you got out, that's all that matters. But from here to here, even if you would have got out right here at our support level at 204.19, and as you can see, we got support right here at our other level, 208.05. See this little wick right here? I can even go in a little bit closer. See this little wick right here? Okay, so we got a little bit of a bounce, then we continued on down. Okay, that's nothing that would have got anybody out of a trade. But you could have had this level as a T1 and maybe this level as a T2. But just making it to this level right here, you would have made about 4 times on your money. Hello, Cathal. Good to see you. Cathal is also one of our premium members at the Simple Trading Life. Okay, so again, this was on our watch list this morning. This played out like we thought it would. And if somebody took the trade just to this support level here, they didn't even have to get all the way down here to these wicks. you would have made about 4 times on your money. And what that means, if you're new, is if you had $500 in the trade, you would have made $2,000 in profit. Okay, if you would have had $1,000 in the trade, you would have made $4,000 in profit. That's how big of a move this was and strong of a move. And we were talking about playing options on this. All right, now you could just play it straight up, right? And that would have been a $7 move. So it just depend on what you had. But on an options play, you would have made about 4 times your money on this move right here. Okay, so that was one of them. Let's see here. Another one, and let me go to, this was one of the small account growth plays. Okay, so this company here, Energis, or however you pronounce it, it's WATT. All right, so this met some certain criteria that we look for in the premium room for these, what we call small account growth plays. Now let me turn on, I need to turn on our after hours pre-market so you can see. All right, so this name had some news, and as you can see, it moved very nicely in the pre-market. Okay, so what we were looking to do, very conservative. We're very conservative in the Simple Trading Life room. Doesn't mean that we're going to miss big plays. We just showed you on the cues, there was a trade that could have made you 4 times on your money. Okay, this one here, you would have played in shares, right? Equity play. So, however, it doesn't matter. On my Facebook page, on the Simple Trading Life Facebook page, I gave the example. If somebody entered right when we took out the pre-market highs, so up here, I think it was let's look here, I'll tell you exactly, at around 295. This initial spike up was 85 cents. Doesn't sound like a whole lot, but let's just say that even when it went up there and started to come back, you sold at 80 cents. If you had $500 to play with, you could have bought, I'm going off memory here, but I think it was about 165 shares of stock, which would have made you $132 profit on a 400 and some odd dollar trade. So it was a 27% gain on your money on this initial spike right here. Then it faded back down. We were done with it at that point. But there are people that play these smaller names and they look for possible continuation. This one got it, right? Now, we didn't play it. Okay, I would tell you if we did. All we were looking for was this initial pop, which was 85 cents. It faded back down to here, and then it got another pop all the way up to 417. So if somebody would have played this second pop and maybe even sold here, they could have done that again, right? They could have done that same thing again. They actually would have made a little bit more money on the same size play. That's why we call these things small account growth trades. Because if you have a smaller account, this is something you can afford. And if that's the only trade you made today, then you grew, let's say you had a $500 account, you grew it by 27%. That's phenomenal. That's awesome, right? You do that once a day, literally your account will just grow and grow and grow because it compounds, right? Now your account's worth 27% more. So the next time you can take a trade that's slightly bigger. And then the next time you can take one that's slightly bigger. All right. So that was Watt. LMT, which is Lockheed Martin, was another one that was on our list. Okay, because they had an earnings beat. So I want to show you here. You go back to this candle. Now, throughout the day, you see how it sold off. This initial candle right here, and we were expecting some sort of pop because they had an earnings beat. No matter what the market did, this was a $9 spike to the upside. So again, okay, now this one you could have played options. You didn't have to, obviously, not very many of us are going to play a $385 stock excuse me, 380, 300 and whatever, we're not going to play that in shares, most of us. There are some people out there that have account sizes where they're going to play that. But even at options, a $9 spike, and let's just say you catch like $7 of it, that's big money that you're going to put in your account, right? I can give you an idea of what that would have been. Okay, this won't be exact because it's not it's not happening in the same volatility that was happening at that time. So let's see here. Where are we at? We are at 372. So that'd be approximately 380. All right. So let's just say that you bought in right here. You'd have to pay about 690. Then you'd need to go, let's see here. Well, this isn't going to work right now, obviously, because the volatility is not where it was at that time. See, normally what you would do, okay, normally what you could do is you just take where you have to get in and then where you're exiting, and they'll show you about what you would have made. But now there's no volatility left. It's come way down compared to this morning. And anybody who trades options, they know why that's important. So volatility is what's huge when it comes to options. The more volatility there is, the more chance you have to make money. Also, there's more chance you have to lose money at the time. As that volatility decreases, your ability to make money and how much you would lose if you lost, it actually decreases at that time. So I can't show you now, but you would have been able to make very good money on this initial spike here this morning. So that was LMT. We were also watching the market, the broader market, and we were expecting to see it fall. And I know at least a couple of people in our room made some money on different scalps on the way down. Okay? They made money on scalps on the way down. Now here, I'm not going to go into all of the reasons why this was a good trade. The folks in my room know why. But this candle right here, you could have entered the trade just below it, figured out what your price targets would have, your take profit target would have been. Okay, would that have been possibly down here? Would it have been, something over here to the left? Okay, maybe like right here. Or maybe you were going to try to take it all the way down to the next level. So if I scroll back over here, okay, maybe you were going to try to take it down all the way to here. All right, but this was a very high probability trade. And again, the folks in my premium community know why. And at least one or two people took trades on the way down here. So we had this nice sell-off. Then we sort of rounded here, sort of rounded off. Hey, Sonny, good to see you. Okay, so you'll hear us talk a lot about a market rolling over. So when we say a market is rolling over, this is what I call a rounded bottom. It's exactly the opposite. Okay, it's showing us a loss of momentum. We start to get some bottoming tails in this case. If the market was rolling over, we would start to get topping tails. They would be up on top. But it's just like it sounds, right? The market starts to roll here or rounds off, and then it goes the other way. So there was a nice scalp here to be had. It didn't make it all the way to my target. My target was actually right here, which is 27.50.50 is my target. But still, up to here was 27.47. You would have entered at 27.32.50. So what is that? $14.50. So you still could have got $14.50. I was looking for it to get right up below this level here, this resistance level. So I had an alert set at 27.50.50. But from right here, when you take out the top of this hammer, okay, up here to where this started to come back the other way, that was still a $14.50 move. Again, we trade price action primarily. Price action, support and resistance, supply and demand. This is simply a price action trade. It's very easy to identify, and it's a very high probability trade. You know, even if it doesn't make it to your target, if you're managing your trade properly, you're still going to make quite a bit of money. You're going to make quite a bit of money on a $14.50 move. All right. So those were some of the things that happened for us in our room this morning. And hopefully, I mean, I shouldn't say hopefully, the QQQ, that was the trade of the day, right? Anybody who was in that one, that was the trade of the day. You know, obviously, like I said, you could have made about 4 times your money in a very, very short amount of time. Very, very short amount of time. Okay. So we still have our alerts set. Nothing's really happening. Let's go ahead and, as usual, let's look at some names in the market. And infamous, I didn't forget about you. We will look at VXX here in a minute. All right, so here we are on Apple. And let me turn off, well, I'll just leave them on for now. So you guys can kind of see the pre-market. I turn it off during the day. Once the regular trading hours start, this gray area here, and if I scroll back, anywhere you see a gray area, that's after hours until you see the red line. And here, it'd be right about here in the middle. So after hours and then pre-market. And then the white is the regular trading session or regular trading hours. So on Apple, open flat, excuse me, over here. We gapped down slightly. And then we had this nice sell-off all the way down here. So let's see where we open. We opened at 276.28, and we were as low as 265.43. So what did I say that was? 276 down to 265. So not quite, right? Not quite $11, or is it just over? Yeah, not quite. Not quite 11 bucks. So that was a big sell-off on Apple. So anybody trading Apple this morning, even if this support level was your target, right? Even if that support level was your target, you got out right here. You made really, really good money. Okay, then we put in this Doji Hammer. And as you can see, the next candle, I try to tell the folks in my room all the time, a Doji hammer will act like a regular hammer, but it's usually not quite as strong or not quite as predictable. And this is a good indication here. It did eventually start back up, but look at the next candle. Next candle went down. This one, again, it kind of came up a little bit, but still kind of flat. And then finally, the third candle, it started to move up. All right, I like more a traditional hammer that has a body sort of like this right here on this candle, and then you have your wick about 3 to 3.5 times the length of the body. That's what I like to see. We're not going to do anything until this candle gets taken out anyway. Okay, the folks in my room know that. We wouldn't have been doing anything on these 2 candles. Okay, we wouldn't have been doing anything until, right, until we take this out. Then you go from there, because that's the high probability play, and that's what we're all about in here is high probability plays. Okay, I'll come back. We are moving up in a hurry on the market. Okay, so my target did get taken out right there. So the first alert was when we were clearing this. The second alert that just went off was my target getting hit. And now let's see here. Scroll. I'm making this bigger so you guys can see it. Let me minimize this. Down here, this is just relative volume. So anybody who, they might see that down here. This dotted line is 3 times. So if this ever turns green, that means the volume on that candle is more than 3 times greater than the average volume over the past 5 trading days. Over the past 5 trading days. That's how I have it set. Okay, so these down here, anyone that's red, they're less than 3 times average volume. Okay, we'll watch this for just a second. We'll see what happens. We got up here to our resistance level, and we are catching a little bit of resistance. We talk about this a lot. When we watch it in real time, you'll see the struggle. If this candle continues, and let's just say it closes up here and it looks like a solid candle, and you see it later, you'll think, well, it just blew right through here. But as you can see right now, it's struggling with this level. Excuse me. It may still go above it, but there is a struggle right there. So, and we also have the 20. This is the 20 SMA if you're new, the 20 simple moving average. The green line is the 200 simple moving average. Those are the only two moving averages I personally use. There are a lot of people who use, a bunch of different things. Maybe they use 20/50, 10/30, 14/30, 9/22, 8/21. For years, I'd say for a couple of years, I used to use the 8 EMA and the 21 EMA. The only reason I went away from that is more really hyper-focused on a certain specific way of trading. Nothing wrong with it. I did very well with it. But the reason I use the 20 and the 200 is because they are some of the most watched moving averages in the world. Lots of traders, institutions, hedge funds. Primarily, there's four that big money watch, and that's the 20, the 50, the 100, and the 200. Simple moving averages. So I like the 20 and the 200. The 20 is what I would call my fast moving average or quick moving average. The 200 is your slow moving average. And anybody who's brand new and you don't understand what we're talking about, when we say that this is the 20 moving average, whatever time frame you're on, right now we're on the 30 minute. That means the last 20 candles or time periods, the last 20, okay, this is what they average out to. The last 200, okay, the last 200 candles on this is what they average out to. Okay, this will always be smoother than this because this is showing what's happened in the most recent 20 candles. And this is going back 200 candles. All right, as you can see, we're still struggling a little bit right here. It's going to make another run. Here it comes. You can always, I show the premium members all the time, you can always turn on time and sales and you'll see how the orders are coming in. These are actual sold orders, the price they were sold at. Obviously greens are buys, reds are sales. And over here, this is multiplied by 10. So this is 10 contracts. And when you have 10 contracts of ES, you're controlling 10 times 100. So you're controlling 1,000 shares right there. When you see 142, that's 142 times 100. So somebody's controlling 14,200 shares there. All right. You see the price. Okay, already in the little time that we've watched here, it's went from 52 to 48. And I have this set to where I only see 10 or more. Okay, so sales of 10 or more contracts. That means anything less, 1, 2, 3, 4, 5, 6, 7, 8, 9, I'm not even seeing because I'm not really worried about that. It's these bigger ones that move the market. Okay, so right now you can see it's sort of selling back. So we are struggling right here with this resistance level. And this is 27.52, by the way. 27.52. All right, what we'll do, let's set an alert just above the 20 here. Because if this alert goes off, we'll know not only did it get through the resistance level, it'll be above the 20. All right, so Infamous wanted us to look at VXX. Okay, VXX. Now, I don't trade this. I know a lot of people do. So there's not going to be any lines on here, and you guys will get to see me draw in our support and resistance lines. If you're new, it's very simple. Go to your 4-hour chart, switch from candles to lines. Make sure you have your price level tool on Thinkorswim. It's this thing right here. I do my charting on Thinkorswim. I don't trade on Thinkorswim that often anymore. Okay, then you start with the most current price and you work your way to the left. We're looking for sharp pivots. And if you want to be exact, just hover over. Okay, I say this all the time. You don't have to be exact. But if you want to be, just hover over. You'll see where price closed, 47.35. And then I can get it exact right there. Okay, so that one is exact. Then I come down here to this next one. Let me hover over it. It closed at 42.89 right there. Come down here. I'm going to hover over it. It closed at 40.46. Come down here. Closed at 38.93. Okay, I'm getting these exact, but you don't have to be exact. That's too small. I don't even have to worry about that. I come down to the next one, 37.08. You see we're at 37.09 there. That's close enough. You do not have to be exact. If you're within a few pennies, you're good. All right, I'm going to draw a level here only because you see we kind of double topped right there. 44.05. And let's move back this way. I'm going to ignore this. I'm going to ignore this. Too small. Probably my next one's going to be right here, 50.01. Okay, 49.99 is close enough. I'll put one right here. This one is 52.44. That is close enough. That's within 2 pennies. We're going to ignore that one. I'm only going to draw about one more in, and then we're going to turn the candles on. 65.11. Wait a minute here. If I can get it, 65. I'm going to actually edit this one because it's more than just a couple of pennies off. If you're 2 or 3 pennies off, that's fine. If you're 10, 15 cents off, you definitely want to adjust it. And then I'm going to draw one more in. Okay, see here we kind of double bottomed right here. So that's something we want to know about. 57.70. 57.72 is good. Okay, then you turn your candles back on. Go back to the time frame that you trade on. For me, that's the 30-minute primarily. And now you can start and look and see how price levels are respected. And if you see a level that you feel like you need to draw in somewhere, you can. If you think you need to adjust something, you can. Let me come back through here. Everything looks pretty good to me. And a very easy way to know if you think you might have to adjust something is look for the range of each day. Now there's a really easy to do it. You can turn on your ATR, your average true range indicator, and that'll tell you what the average true range is for each day over about the last 14 periods. But here's a really easy way to do it. 45.72 to 48 and just, about $3. Come down here. 40 to a high of for about $3. Okay, all you're doing, you just go through about 3 or 4 days. 38.83 up to 40, not quite 2, but just say $2. So we had 3, 3, 2. I'll do one more day. Right here, 40.35 to 41. Little, let's see, 40.35 to 41.92, not quite $2. All right, so I would say the average true range on this is probably around $2.50 per day. All right, so now you look at these. Okay, this is about $5 apart. Probably not going to move all the way through that range. Is there somewhere where we could draw in a line that makes sense? Okay, there may not be, right? There may not be. Let me come back. And okay, if you don't see it on the 30-minute, go up one time frame. Go up one time frame at a time. So here's the hourly. Okay, let's look at the hourly. Is there somewhere along here? Nothing that's really, because see here where we're at the bottom of these candles, we're actually going right through the middle of this. So really there's nothing to draw in there. Nothing to draw in. Now this does give us a look at the bigger picture. You can kind of see how we came down. We were making lower lows, lower highs, lower lows. Then we made a higher high, higher low, a little bit lower high. We started back down, came back up. And now we're kind of working our way back up here. So it looks like we put in a bottom down here around 36.84. Want to look over here. We're working our way back up. I'm looking for anything that I find distinct. Then I'm going to switch back to the 30-minute here in a second. In fact, let me get rid of the after hours. It's going to make this a lot easier for me to see. Okay, see how it just got rid of all that stuff? Okay, makes it a lot easier to see. It also shows us the gaps, and I like to see the gaps. And we moved back up, come back over. All right, so what I see here, if I go back to the 30-minute, I would expect that where we're rejecting right here, price is going to come back somewhere in this gap, and then it's going to turn back around. It might even come back to the 20 at some point because the 20 is going to keep moving up. It's going to come down. It's going to find some support. It's going to come back, and it's going to try to go higher. It's going to try to go higher. So that's what I see playing out in the short term on VXX. So hopefully, Infamous, that helps you. We've got our levels drawn in here. You can see them, 38.93, 40.46, 42.89, 44.05, 47.35. Did I have anything above that? Yep, 49.99, 52.42. Okay, so there's your levels, and that's what I would expect to see happen. All right, when we bottomed out over here, we came down in a similar way that we're going back up. Okay, we came back up. We already looked on the 1 hour chart. This was a resistance area to the left. So now we're kind of selling back off of it a little bit. I think what's probably going to happen is we're going to come down in here somewhere, and then we're going to turn back up. Maybe we'll come and catch some support here off the 20, and then we're going to make another attempt to get through that resistance area that we saw to the left. Okay, you're welcome. You're welcome. All right, so let's go back and look at a few more things. If we have any alerts go off, we'll check them out, right? Okay, AMD. AMD is one of my favorites. I like to trade it quite a bit. All right, so this was yesterday. Okay, here's where we ended. So we opened up relatively flat, just like everything else, little spike up, and then sold off. And sold off pretty significantly, over $4. It's a big move on AMD, right? You're going to make a lot of money on that move. Okay, then we put in the spinning top, which is a signal of indecision after a move down. This is just literally not only price action, this is just candlestick basics. So if you are a brand new trader and you're just getting into trading, one of the very first things you should learn, besides trading psychology, that is the number one thing you should learn, is trading psychology. But after that, when you get into the basics of trading, before you get into strategies of any sort, learn candlestick basics. Okay, learn what these candlesticks mean. Okay, how to sort of just read them on their own. So a spinning top, like we have here, is one of our couple candles of indecision. The other one would be a doji. This is a doji right here. Okay, this is a spinning top. Now what that means is that the open and close were in close proximity. So this candle opened here and it closed here, but in the meantime we had a struggle. right? Buyers tried to push it up, sellers tried to push it down, and in the end, we met somewhere in the middle. That's why they call it a candle of indecision. Nothing was really resolved. However, you can come all the way back up here. It's really from back up here. This is the origin of the move. This is a strong move to the downside. Then we get this. Then we see this candle start to go green. So then what we're looking for is, can this candle take out the top of this? Okay, if it can, or if this one can, that starts to show a change in momentum. And you see what's happened, right? We've been slowly moving our way back up until we get here. This is red right now, but we got what, 20 minutes to go on this candle, a little bit less than 20 minutes. All right, now this isn't as strong a signal as a hammer, but it's still, whenever you see something like this after a strong move down, light bulbs should be going off, because it should be telling you, I need to see what's going to happen next. Then when you see that this is what happened next, you start looking for some possible upside. If this next candle was red and came down near the bottom of this, or even took it out, then there's more potential downside coming. All right, I hope that's easy for everybody to understand. Okay, Amazon. All right, so on Amazon, here's where we closed yesterday. We gapped up, just barely went up, sold our way down, came back up to the 20. So this is what we call a break. We broke the 20, retest, and go. This is a pattern that plays out a lot. You break through a level or a moving average. So this is what we broke through, the 20 simple moving average. We broke, we retested it. Okay, we retested it, and then we went. Okay, break, retest, go. That's a very common pattern. So if you're playing it from a scalping perspective, you could either, once it takes this out, or the more conservative would be once it takes this out, you could look to go short. And let's look over here. We'll see if there was a reason it caught support where it did. And yes, it's this flat structure level right here. Okay, this flat structure level right here. If you see where my line goes across the screen, that's right where we caught support. All right, then it started working its way back up. And where did it work its way back up to? Right to the 20. So what we would say on Amazon is that the 20 is being respected. It was respected here, and so far it's being respected here. All right, that's Amazon. Let's look at Aussie US Dollar. This is a Forex name. Okay. One thing that I see right off the bat, I do not personally, I know a lot of people who do, and I even teach you how to do it. I don't personally trade crossovers, but if you do, right here was where the 20 crossed over, right? Crossed over on its way down, the 200. So what you want to see is you want the 200 to be relatively flat. I mean, a little bit of angle one way or the other isn't that big of a deal. But then somebody who likes to trade momentum, they could stay short as long as you don't get back above the 20. So you could have stayed short basically, I mean, right here, little bit tough, but these are smaller candles. It wasn't like there was a big break there. You could have stayed short until this started coming back up to the 20. So from all the way up here down to here, okay, if that's what you're into. That's not how I trade, but that is something that just stands out right there. I was watching something over the weekend. I don't usually talk about traders by name, good or bad, okay, because I don't want to pump somebody up that may end up not being legit, okay, or vice versa, people that I think are clowns, okay. I'm never going to call them out by name because I just don't think that's right, okay. I wouldn't want somebody doing it to me, but I just don't use people's names in our community. But this guy's fairly well respected. I was watching a video that this guy put out. I would say he's very well respected. He's somebody who's rather conservative, but he does trade crossovers and momentum trades. And one of the things I found interesting, and he makes no bones about it. I mean, it was showing everybody in this video, this webinar. I think it was a recorded webinar. I was watching it on a video, so I didn't watch it live, but it was like a webinar. And he was talking about crossovers and momentum trading, and he showed his own statistics, and his win rate was only like 40%. 40. Meaning he loses 6 times out of 10, and he only wins 4 times out of 10. However, and this is, I pointed this out in our community. I think I pointed it out in the free room. It really doesn't matter. It really doesn't matter. Okay? This guy is very, very profitable because his wins are big wins. But when he does lose, he loses small. So even though he's losing more than he's winning, he's losing such a small amount. And then he wins these big trades, right? Based on his rules. I'm telling you right now, I don't trade this way. But my whole point that I want you to get out of this is no matter how you trade, sometimes win rate isn't even really that important. I was telling one of the traders in our premium room today about a guy that was a former institutional trader. I think he worked, it doesn't really matter where he worked. I think it was Merrill Lynch. It was one of the big ones, okay? Years ago, and he was the #1 trader in that firm, and same thing. His win rate was only like 40%. And you would say that's horrible. But he was the #1 guy in the firm in terms of profit. Profit compared to loss. Profit versus loss. By far. And it was the same kind of deal. Whenever he would lose, it was tiny. And when he would win, it was really big. Okay, so, and those guys mostly are trading long term. They're not day trading like we are, right? They're trading, institutional traders are mostly trading over weeks and months and sometimes even years. All right, so let's just look here. Was there anything else standing out? I know what I want to look at here. So we had a little bit of a double top right here. See this? Okay, so that tells us that momentum may be changing. Okay, it wasn't like it was a steep incline, but you still have this double top right here. Then it starts working back down. Now, I don't trade double tops because for a double top to confirm, you got to get below this. All right, so most people who trade this type of a pattern, the confirmation doesn't come until you get down here. Now, was there still a lot to this move? Yeah. Yeah, from here, wherever you were going to enter, here or here, you still could have caught it all the way down to here. That's still pretty good. But we like to try to get into a trade as early as we can that is still high probability. Right? So, was it yesterday? I think it was yesterday, there was a trade where somebody on Twitter was talking about how they got confirmation at a certain area on a certain trade, and they were talking about what a great trade it was. Well, in our room, it was a name that we were trading, and we were in the trade $4 before this guy was. And he was talking about how great it was. I got confirmation at X, and man, it was a great trade. Well, we had the same exact name, but we were in it $4 earlier based strictly on price action. So we caught $4 more of the move than he did. Anyway, that's why I like price action better than I like to trade these traditional things like head and shoulders, double tops, double bottoms. It is important to recognize them, right? As soon as you see something like this, you should be thinking in your head, momentum. Momentum is stalling. We may be looking at some sort of a reversal. Then you look for some reason to get into the trade, right? You look for some reason to get into the trade. I can see, let me see here. Yeah, I can see something right up in here that would be covered in our premium room that definitely would have got us in right up here, right up here. And unfortunately, I can't get into every specific when we do these free YouTube live streams because that wouldn't be fair to our premium members. But there's definitely something right here that would have got us into the trade right about there. And then obviously we could have rode that down. We probably would have exited here, and then we would have looked for some sort of re-entry somewhere else. Okay, we're always looking for the highest probability trades. So we'll get out sometimes, although this move, you saw this spike back up to the 200 and then it went lower. And maybe that's what we would have looked for, right? Get out down here. Let's see if we reject the 200 and start lower. Maybe this candle here, if we get below it. I'm just throwing some things out there. But that's how we trade. So we're looking to get in earlier than most people, but then sometimes we'll exit where somebody else might be saying, hey, as long as we're under this 20, I'm riding it. That's fine. That's absolutely fine if that's your strategy. All right, so let's look at some other things. Sunny wants me to look at ES and SPY. All right, so let's go back to ES. All right, 1 hour. Okay, Sunny says the 1 hour. All right, so what he's asking is we have, he's calling these consecutive hammers, but really this is the only hammer. Okay, Sunny, this one is not a hammer. This one is, right? Why is this one not a hammer? Because the wick, okay, the wick really isn't even 2 times the size of the body. Let me expand this out for you. Bring it back in. Okay, here's the body. The wick, the textbook definition says this wick has to be at least 2 times the size of this body. The body itself is 27. The body itself is $4, and let's see, the overall length of the candle is more than that. I'm sorry. Give me 1 second. $18. All right. So this is 4. The overall length of the body is $18. Is $18. So we have some up here, and then we have some down here. I personally, my thoughts, I think the wick really needs to be 3 to 3.5 times the length. This is a hammer for sure. Excuse me, shooting star. Okay, for sure. Now, you're saying, like, what if we had 2 in a row? Well, we basically had 2 in a row here, then we had 2 in a row here. Okay, so they're countering each other. Typically, guys, nothing is 100%. I want everybody to know that. Typically, when you have something that counters something else, whatever is countering, meaning these ones are countering these ones, this typically, not all the time, is the stronger play. Meaning we would be looking to maybe go short if it cleared underneath here. All right, sometimes it'll happen where you'll have like one hammer immediately countered by one shooting star, and especially if you were already moving down, they call that a shooter countering a hammer, right? Then you would look for the bottom of that shooting star to get taken out to go short. So here we kind of have 2, and I'll give it the benefit of the doubt. We'll say we have 2 here. We have 2 countering it. Okay, so we would be looking to enter if it had a clear break underneath of here. Okay, same direction as the overall trend. The overall trend is down. Now, let's see where we're at. Okay, we're less than 6 minutes away. Let's say the next candle opens and starts to go up. There's really nothing to do. Not unless it got up here and took that out. So our play here, if you're trading on the 1 hour, And I want everybody to be careful. I'm not just talking to Sonny here. Be careful about flipping around time frames trying to find something that you think you like on one particular time frame. Okay, what you really want is you want to have a time frame that you trade most of the time. I'm not saying you have to always trade that one time frame. Okay, for me it's the 30-minute. Okay, for some people it's the 15, some people it's the hour, some people it's the 5-minute. You want to trade one particular time frame the most, and then once you enter a trade, you want to make your trading decisions based on that time frame. So I know there's some folks in my room that have struggled with this. I know there's a lot of people who struggle with this. I'm just making this up, but let's just say somebody enters a trade on the 1 hour. While the trade is playing out, they're flipping to the 30-minute, they're flipping to the 15, they're flipping to the 4-hour, they're flipping to the 2-hour, and then they'll find something on one of those charts they think confirms their bias, right? So if you entered short here, what is your bias? Your bias is short. Okay, if I entered short, I'm thinking, right, my bias is that it's going to move down. So then what they'll do is they'll start flipping around to all kinds of time frames, and they'll try to find a time frame where it looks like on that time frame it's confirming what they think they see on this time frame. You can't do that. You can't do that. You will end up costing yourself a lot of money if you do that. If you enter a trade right here, you need to make your decisions based on this time frame, the 1 hour. It's okay to look at other time frames for context, but your trading decisions need to come off of this time frame, wherever you entered. So just be careful with that. Again, I'm not talking to Sonny. I'm talking to everybody who's listening right now. Everybody who's listening. So far, there's not anything to do here unless it can take this out, and then we would look to go short. And then these are obstacles, right? These two bottoming tails, these are what we call obstacles, because both of these show that in this area is a lot of buying pressure. That's what created these. Remember, at one time, this was a big red candle. At one time, this was a big red candle. The only reason they ended up as hammers is because buying pressure came in and pushed them back up. Just like selling pressure came in here and here and pushed these down. This was a green candle. This was a big green candle. And selling pressure pushed it all the way back down to here. And I always say the most recent thing that happened is the most important. The most recent thing. So again, that's why they say, when I say they, I'm talking about people who trade price action. The counter move is typically stronger than the original move. Because why? It's the most recent thing that happened. And it's confirming the trend that we're already in. Okay? So I already have an alert right about there. It really needs to be a little bit lower. Give me 1 second. Let me see what the lowest of this is. 29. So this one I'm going to make 28.50. There we go. Then we'll know for sure that both of those have been taken out. All right, so Sonny, I hope that answers your question. I know that can be confusing when people see this. I was watching somebody the other day. It might have been over the weekend. I watch lots of stuff, whether it's things that I believe in or not. I think you can learn something by even watching trading strategies or videos on things you don't believe in. Okay, you can sometimes learn, oh my gosh, I know exactly why that didn't work. Okay, so if it's a strategy that you don't like or you don't believe in, you can watch and somebody who's trying to teach it, and then maybe it didn't go their way or whatever, you can kind of deconstruct it and find out why it didn't work. However, I was watching something on somebody who does trade price action, and they were talking about this very thing. Okay, one of their people had asked them, well, hey man, I see frequently where I'll get a shooter and a hammer right after each other. Well, this one's saying we should have strong downside. This one is saying we should have strong upside. Which one do I believe? And he was basically saying the same exact thing. It's the counter move, because that's the most recent, that typically is the strongest. Plus, you want to see what direction did you just come from, right? Because they tried to turn it around right here. It didn't work, right? How do we know it didn't work? Because they never took the top out. They tried to turn it around here. It didn't work, right? Then they finally did start to turn it around. They got back up here, but then it got forced back the other direction. Okay, so again, this alerts never went off. There's still nothing to do here. All right, let's go look at some other names. Good, Sonny. I'm glad you got that. All right, so did we look at BA yet? Okay, let's look at Boeing. Okay, so here's Boeing. Gap down. Get a little bit closer for everybody. Here's where we ended yesterday. We gapped down, okay, sold up, came back down, and then over here, and we moved lower. Then we rebounded, probably about the same time the market rebounded. I need to get back to the 30-minute. Hang on one second. I do this all the time. I'll start looking at another time frame for whatever reason, and I'll forget to switch back to the 30-minute. Okay? So basically, look at this. This is similar to what we were just talking about. Now, this isn't really a hammer, but it did have a decent-sized bottoming tail. So this was the first candle of the day, 30-minute on Boeing. And what did it show us? It showed us some upside momentum that was immediately countered by a shooting star. Right? Who won out in this battle? Who won out? The shooting star did, right? Because look what happened. And if we add something else in, what direction were we already coming from? We were already moving down. The overall trend was already down. Even though we gapped down, we pushed back up here, immediately countered by a shooting star. And the shooting star won out, and we moved down further. Okay? So we just happened to talk about it, and there's something very similar. Although this isn't truly a hammer, it's not too far away. All right, so this is Boeing. Baba. All right, Baba. We gapped down, we pushed up, we sold back down, sold off, kind of went flat, melted up a little bit, and now it looks like we're trying to move down again. Right here, Baba. Let's, I'm going to skip a few of these. Let's see, Beyond. Okay, now Beyond, there was somebody in my room who took Beyond to the long side earlier today, and we talked a little bit about it. Okay, so this person was asking me, they had a target of, I think it was $100, and I told them, I said, I think you're being ambitious on $100. So I gave them a couple of targets that I liked, and to show those targets, I think I have to turn on the pre-market. Let me look here. All right, so one of the things I was telling this person was I was a little bit concerned that we weren't even taking out the pre-market highs. Pre-market was 93.06 was the high. Okay, second thing, let me come back across here. I might have to go to a different time frame. Give me 1 second. Yeah, let me move up. Always move up one time frame at a time. Okay, I'm going to have to go up a little bit more. Let's go 4 hour. Then I got to come over here. And here we go. Let's look. Where were we at? It was open. Yeah, okay. So here was one, the top of this candle just below it. Don't hold me to this, but I think I said my T1 might have been 92.50. All right. So that was here. And then the next one that I gave, I think, was just below this level. I know it was. So it was like 95 something. Maybe it was 95.50. So maybe it was 92.50, 95.50. Okay. And I didn't even feel great about those. Because, again, coming back to the 30-minute, we hadn't even taken out the pre-market high. So why was that concerning? Couple of reasons, right? A couple of reasons. First of all, Beyond had good news. Okay, they had good news. They're teaming up with Starbucks. Okay, big brand, right? So Starbucks is teaming up with Beyond. Big news there. We get this immediate spike to the upside that then immediately stalls out. And not only did we not take out the pre-market highs here at 93.06, the overall market started to flush. So now you're asking a lot of a name, right, who couldn't even break their pre-market high and would be going opposite a strong move down by the market. So I tried to give this person in the room a little bit of advice. I'm like, hey, be very cautious here. I mean, I'm trying to warn you, it doesn't look good. It doesn't look good. It didn't even look good for mine, right? Because I didn't even get to mine. Mine were like, I want to say it was like 92.50 and the other one was like 95.50. The highest we got was 92. So we didn't even get to the targets that I set. And primarily, we couldn't even get over the pre-market highs. So those are the kind of things I told this person in the room. I said, that's a huge red flag. Red flag when you can't even take out the pre-market highs when you think this name should be strong. Right? Okay, so that was what happened with Beyond. And you can see once it turned, it just, boom, just sold off, just like the market did. All right, so we just had an alert on the market. I think the market might be selling off. There we go. Okay, so now we're on the 30-minute. I'm going to close this in a little bit. We are on the 30-minute. But that alert that went off was telling us that we got below those two little wicks on that 1 hour that Sonny was looking at, right? Here, I'll go back to the 1 hour, just make it easier. Instead of talking about it, we'll actually look at it. Right, there they are, right? And look how it immediately popped down. I can even get in closer. Make it easier for you to see. All right, once we cleared it, look how we popped down. Now, here's the obstacles. It's these two wicks here. If there's a lot of pressure, then maybe that's what this alert is set for. That's so when I'm looking at other things, you'll see on a lot of my charts, I got all kinds of alerts set. That's letting me know different things. You should use alerts to your advantage. It'll take a lot of strength to get through here. It's a lot of buying pressure to the upside. But we did break there. We got a pop. Let's see, the low 27225. And the low here was 2.9, and we would have entered at 2.850. 2.850. So that's $6 that it popped down. Not really the kind of reward to risk I would be looking for on ES, right? If I'm going to jump in here, I'm wanting to maybe get down here, right? I'm wanting to get down in here if I can. I already know just from looking at charts so much, there's actually a big wick over to the left. I'll show you here in a second, and I think it's around 27.11. That will also be an area that we would have to get through. Not saying we can't. We absolutely could if you get enough selling pressure to the downside. Okay, let me come back over here. I think it's 27.11. Right, here's the wick. Yep, 27.11. See it up at the top of my screen up here. Okay, the bottom of this long wick is 27.11. I just look at charts so much that a lot of this stuff sticks in my head. So that'll be another obstacle on the way down. And it's a pivot. You see that? It's a pivot. So if we come back over, now we're still on the 1 hour right now because this is where Sonny's seen these four candles. But we broke there. We got a $6 pop down. And right now we just sort of stalled out because we're right in the middle of these two big bottoming tails. But we have an alert. So if this alert goes off, that tells us that the sellers are coming in trying to drive it lower. But even if this goes off, then we have to get through 27.11. Now that would make for a good trade. If you could get through here and just make it to 27.11, that's a good trade, right? Because you entered up here at 27.2850 down to 11 would be $17.50. That'd be a good trade. Yeah, that'd be the kind of reward to risk that I'd be acceptable with. Just because of these here would make me a little bit nervous, and as you can see, so far we can't get through it. Did we even make it to the? Yeah, we made it about halfway into these wicks. Okay, let's go back and look at some other names. Let's go to the other end of the spectrum, work our way back. Walmart not doing much. UAL not doing much. Okay, United Airlines. I'm actually in a trade in United Airlines right now. It's not doing anything. I expected that United Airlines was maybe going to flush today because I kind of thought the market was, and the market did, and United Airlines didn't. And now overnight they received some decent news. Here, I'll just bring it up here. Okay, overnight, when I say decent, all airlines were notified that they are going to be eligible for government money. And I think it's a pool of 2.9 billion, something like that. So that's not great news, but it's like, hey, there's some money here to try to help you guys out. But then they got a downgrade this morning, which is negative. They're already going down, right? The trend is down. You can see that. So that's what I was trying to show everybody. Okay, the trend was down. Every time we'd have a little pop, we'd have a bigger sell-off. Little pop, bigger sell-off. Little pop, bigger sell-off. Little pop, bigger sell-off. So we just had a little pop here. I was anticipating we're going to have another sell-off. Plus, I kind of, again, I thought the market was going to go down today, and it did. And United Airlines has basically just been flat all day. Hasn't really done anything, okay? It opened up down here. Actually, when it opened up, I was telling the room, I was up 32%. But immediately it shot to the upside, and I went from being up 30, I'm in options, puts, obviously. I went from being up 32% to down about, I think it was down 9%. Okay, nothing to take me out of the trade. And then as it worked its way back down and kind of where it's been the rest of the day, I'm just sort of flat. So I'm going to hold it one more day. And if for some reason it starts to go up, I'll just get out, right? If it doesn't do anything tomorrow, if it's flat again tomorrow, I'll get out as well. Why? Because on Thursday, there'll be a lot of premium burn because I'm in options. So I'm not going to hold it past tomorrow. No matter what happens, it either needs to flush and I'll make money. It needs to start to go up and it'll stop me out. Or if it's flat, I'm going to take myself out because I'm not going to hold it into Thursday and Friday and let my premium burn up. Okay, so hopefully that gives you an idea of what I'm doing there with United Airlines. Let's look at Twitter, then we'll look at Tesla. All right, Twitter. Okay, Twitter gapped down and sold off. I did have a little spike up here to the 20, sold off, and then has been trying to climb back up, but now it's kind of losing its steam here as we're into power hour. That's never a good sign, right? You're losing steam coming into power hour. Tesla. Let's look at Tesla here. All right, so Tesla closed over here. So basically open flat. No, I'm sorry, gap down because it opened down here. Gap down, came up here to support, or excuse me, resistance at 749.50. Then big flush. Big flush. The funny thing is on Tesla, there are two totally different camps on Tesla. There are people that they're in Tesla to the long side no matter what. I mean, they are just totally blind no matter what. Then there's a whole nother camp that are totally against Tesla, right? They think Tesla is a deck of cards. They think Tesla does a bunch of illegal stuff. They think Tesla illegally props up their stock. The truth usually lies somewhere in the middle, right? That's what I always say. The truth usually lies somewhere in the middle. But it's interesting. I'll watch people on Twitter, and again, some of these people are smart. They make a lot of money. They run rooms, or they run services, or they run, some of them even run prop desks and hedge funds and stuff like that. And there's one guy in particular that I'm thinking of, and again, I'm not going to use a name or say what his company is. He is so pro Tesla that it's just, and he's so smart. He runs a big firm, Okay, that not a trading service. He runs a firm, and he is so pro Tesla. And no matter what, even when Tesla fell from what was it, $968 or whatever it was, I'd have to go to like the 4 hour. Let's look here, because I'm just trying to show you how anybody can be blinded. Yeah, 968.99. Okay, so even when it fell down here, he was like, nope, it's definitely going to 1,000. It's definitely going to 1,100. When it popped up like this, he was like, told you. And then boom, this huge drop, right? What was it, like almost $600 or $500 drop. The whole way down, he's like, oh, you people are crazy. You're stupid. You better be buying this up. I'm buying every dip. This thing is going to the moon. Well, then it popped up again. Then it came back. Then it's popped up again. Now it's pulled back. Will it go up there? It may, but you can't tell me that a ton of people didn't lose a boatload of money down through here, right? It's impossible. So again, all I'm saying is, even when stuff like that happens, people who are long biased on Tesla, it's like they're totally blind to anything else that happens. And the ones who are short biased, they're totally blind when it's ramping up like this, right? Oh, no. It's going to collapse. It's going to collapse. So as a price action trader, I don't care about any of that, and neither should you, right? You shouldn't care about any of it. You trade the price action. Whatever the price action tells us. Okay, again, we, meaning my premium members, we can see a beautiful setup right here that would have told us that we could have went short on Tesla. I wasn't watching Tesla at the time. It wasn't one of our watch list stocks. And again, I'm one person. I can't watch everything. So what we do in our room is I try to teach you how to trade, how to identify setups, right? How to analyze a stock or a name or a market or an ETF or a currency pair, how to chart it properly, and then how to set your alerts so that you know when my alert goes off, that's my trigger, I can enter either long or short there, and then you'll know where your approximate targets are, and you go from there, okay? Because I can't watch everything. And I definitely can't pull the trigger for you. I can't trade for you. That's why we don't run an alert service. Alert services are just absolutely silly because you are never going to have the same entries and exits as the person who's doing the alerting. I want you to just follow me on that, okay? You will never have the same entries. You'll always be late. And you'll never have the same exits. You'll always be late as the person who's giving you the alerts. So I'm just making it up. I'm just saying maybe somebody told you, hey, go short Tesla at 725.50. I'm making a number up. That'd be down around here. Go short Tesla 725.50. By the time that you receive the alert, bring up Tesla on your screen, okay, look at it, kind of quickly analyze it to see, is this something I really want to take? Then input your order and place it. Okay, Tesla's probably already down in here somewhere, right? So you've already missed all of this part of the move. Then when it comes down here and starts to bounce, and that person alerts you, hey, exit Tesla at 679. Okay, I'm just making that up. Okay, it starts to bounce. That person gets out of it, alerts you to get out of it in the alert service. Well, these bounces are usually pretty violent. So maybe he got out down here, but by the time you, again, go through that process, price is probably all the way back up here. So you got in late and you got out late. And if you were playing options, that might have been the difference between you making any profit at all and either zero or losing money. I know so many people who are either currently in alert services or who tried them and all they did was lose money. Now, I was having this conversation with one of our members not too long ago, and he was asking me, why do people even stay in those things? He goes, I tried them before. I never made money. Once in a great while, he said, I would hit a nice trade. I said, that's exactly it. All it takes is for them to hit one nice one, and they forget the 9 that they lost on, right? So maybe I'm just making something up. Maybe they make 100% on one trade, but then they lose over and over and over and over on like 9 other trades. That one trade like totally clouds their judgment. So again, I'm not trying to put anybody down, like anybody individually, but alert services are just not going to work for you in the long run. If you want to be a consistently profitable trader, you need to learn how to do it on your own. Now, people can feed you information, then give you ideas, but then you still need to understand, okay, what makes this a good trade or not a good trade? Okay, my people my premium members should be able to look up here and see the setup and know why this would have been a good short. Okay? And for me, there probably would have been 2 price targets. Okay, I probably would have been looking for the 200 for T1, and I probably would have been looking right here for T2. Okay, so I might not have caught all this. I'm conservative. Or you get down here, and let me show you something. Because this is how I know a lot of people are full of it when they say, oh yeah, I caught this whole move and it was really easy and blah, 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 blah. Okay, see this here, you come down. What does this wick mean here? It means we bounced, right? Okay, so we bounced back up here. Now we're above a support level. Then this candle starts, and what happened at first? At first, it went against you. All right, so you went from here, basically 702, to here, 713.89. You mean to tell me, if you were in this trade short, that you would have held from 702 to 713.89 and not got out of the trade or not got freaked out? Okay, maybe. But I'm just telling you, most retail traders, that they don't hold from up here all the way down to here. They just don't do it. Okay, I'm experienced. I've been doing this a long time. I would have a hard time doing that. I can count on one hand, literally on one hand over the course of an entire trading year, how many times I'm able to take a trade from the very, very top all the way to the very, very bottom. First of all, it doesn't happen that often. Second of all, you're going to have stuff like this along the way that causes you to have that nervousness of, do I stay? Do I hold? Gosh, this is already starting to come back against me. I'm above the support level. Uh-oh, now it's going green. So at one time, this candle opened and was green. This was like a medium-sized green candle, something like a little bit bigger than these. This was green at one time. Now you're starting to think, oh man, I'm starting, especially if you're in options, I'm starting to give my profit back. I'm starting to give my profit back. I should just cut and run or lock in my profit. Now, I probably would have locked it in right here myself. And that's what I'm saying. Because I'm conservative. As soon as it starts going against me, plus I would have been above this level, I probably would have locked it in right here. I'm just being completely honest with you, and I think that's what most traders would have done, right? They're not coming from clear up here all the way down here. It just doesn't happen. The few times that I do it in a year, I feel like, oh my gosh, I just climbed Mount Everest. I had it happen. It's been so long since it happened. It was last year. I think it was late summer last year, the last time, and it was on ES. I'm going to go back to the market just for a second. We'll see what it's doing. It was on ES, and it was one of these deals where, okay, so we know this was the beginning of the day. Back then, I was not trading the 30-minute. I was trading 15-minute primarily, actually 10 and 15-minute. Okay, so let's do this. Let me show you how difficult it would be. Close this up a little bit for you. Make it a little bit easier to see. All right. Now, the day that I did it, it was about, I want to say it was about an 80-point move, and it was to the downside. And I was able to hold it all the way to the lowest point. But you tell me, okay, where did we open? We opened here. You tell me how easy it would be to enter a trade up in here and then hold it all the way over here, looking at all this stuff in between. Look at how it goes against you at certain times. Okay, it goes against you here, flattens out. Okay, how easy does that look? Right? It's not really that realistic. That's why I say, even me, it only happens a handful of times in a year. I'll bet you maybe 3 times. Maybe 3 times in a year am I ever able to catch something all the way at the top and ride it all the way to the bottom and be able to hang on through these ups and downs and whatever. And there are things that I use. I remember what I used at the time. Okay, I was using moving averages to help me. You know, we'd stayed below the 20. What else? There was some other reason. I can't remember now. Okay, but one of them was moving averages, and I just held on. Okay, I just held on through all of the ups and downs and ups and downs and ups and downs, and then when we got to what I believe the bottom, and it was the bottom, okay, and I got out, I felt like, whoo-hoo! I just climbed Mount Everest and I won. That's how I felt, right? But that's not what usually happens. You usually get spooked somewhere along the way. And sometimes it's smart, right? Because you don't want, maybe you get down here and then all of a sudden price reverses and comes all the way back up. You get like a V bottom here, and now you just gave away like literally thousands of dollars of profit. That was one of my most profitable trades, by the way, for the entire year last year. So hopefully that makes sense to you guys. All right, so let me go back to the 30-minute. We're going to look at a few more names before we get off here. We usually get off here right around 3:30. So if you're brand new, we're almost done. Okay, kind of seeing where we're at here. Let's see how we came down and we spiked back up. And you see, this is the kind of stuff that's hard for retail traders to stay in trades. Not that I would be in anything right now. Okay, but it's difficult. Okay, we never did clear these wicks over here. We never did. I told you they would be obstacles. You can see what I mean. All right, let's look at Roku. We'll look at a couple more popular ones before we end up here. All right, so Roku ended up here. So it actually gapped up, poked its head up, sold down, came back up to the 20, then it flushed. And then the rest of the day, it's been slowly melting up. So that's Roku. And it had a pretty good downside day. It opened at 131.75 and at its lowest was 118.12. That's a lot of downside for Roku. We already looked at the Qs. Pepsi, let's look at Pepsi. All right, Pepsi, obviously big gap down. See, that's where it ended yesterday. He even went up after hours and then huge gap down. Let's see if Pepsi had news. No, nothing that should have made that happen. Okay, then it went up, came back down, went back up, came back down. Again, other than maybe like right there and catching that down, this would be pretty hard to trade. Maybe right here. You might be able to take that and get a little bit of this. I don't think you'd make it all the way back up there though. So that's Pepsi. Shop, that's what I wanted to look at, Shop. All right, so here's Shop. Those in my room know that I always tell them if you want to trade something volatile, trade Shop. So this has been really volatile the last couple days. How do you know? 583 to 645. Okay, 583 to 645 that day. Over here, 520 to 591. Okay, $70 day. This was, similar. Okay, that's volatile for a regular stock. Look at today. Oh my gosh, look at today. Here's where it opened, shot up, high of 665.74. Total sell-off down to a low of 556.01. Let's check that out. $109 basically, right? Almost $110 sell-off. Then once it started to recover, let's just take it from here. Let's call that 569 to a high of we'll call this 615. 70. So 569 would be basically 70 would be $30, and then another 15. So $45 move right there on a bounce, on a relief bounce. Is that not super volatile for a regular name? That is crazy. $110 drop, 40 now from down here it was 50 some dollars, but you probably wouldn't have entered until up in here. $45 relief bounce. That's just nuts. Absolutely nuts. Okay, let's look at let's see if Microsoft. Look at Microsoft and Netflix, and then we'll go back to the market and wrap it up. Look at Microsoft. Big sell-off. Big sell-off, like $6, $7. Straight down. Then recovered, right? Worked its way back up to where? The 20, and then sold down again. So that's Microsoft. And then Netflix, and then back to the market. Netflix, same thing. Big sell-off right out of the gate. Found some support, worked its way back up. Actually got on top of the 20 here and is still going up. Okay, so let's look at this. Let's say 445 down to 425. So $20 drop. And then what kind of recovery have we had? Let's just start right there. 427 to 442. 427, 442. What's that, about 15 bucks? Is that right? Yep. $20 drop, $15 recovery. Pretty good on Netflix. A lot of money to be made there. Okay. So anything anybody wants me to look at, we're going to look at the market here and then we're going to wrap things up. You can let me know because this is about the time we normally get off. Anybody in here who's new, check us out, simpletradinglife.com. Can come into our free chat room. There's a button, free chat room. You can join our premium room. It's not that expensive, $97 a month. That's it. Okay, we don't charge hundreds and hundreds of dollars. We do a lot of intense study in there. There's a lot of lessons in there. There's a lot of free lessons in the free room, but there's even more stuff in the premium channel. And we do private live streams at least 3 times a week for the premium members. So anyway, definitely check us out and give us thumbs up because we're trying to grow this channel. We want to make this the biggest free channel that we can possibly make it, our YouTube channel. This will always be free content. So the thumbs up help us. Subscribe. We need subscribers. We're almost to 100 subscribers. I think we're like 3 or 4 away from 100. They always say that that's like one of your biggest hurdles in the beginning. You got to get over 100. Then once you're over 100, then you want to get to 1,000 and so on and so forth. So if you're checking us out for the first time, definitely subscribe and then turn on that notifications bell. And anytime we ever go live, you'll be notified. All right, so one last look here before we get off. And as you can see, we never could get through these wicks, and look what's happened. Price has totally reversed and it's heading back up again. So that's why I was saying, if we go back to the 1 hour, like where Sonny was looking, Sonny's one of our premium members, by the way, okay, where he had these 4 candles that were countering each other. Okay, we got the initial move down, but it was right into what I called obstacles, and those people in my room know what I mean. Okay, these are things that can stop your progress going one direction or the other. Right, so these were obstacles. We couldn't get through it, and now look what's happened. Total reversal. Total reversal. Now we're working our way back up. If we can clear the top of this wick, opening price level would be the next logical point for any type of resistance. Okay, we're at a resistance level right now. It's not marked over here, but this is 27.52. Okay, see that? 27.52. If we can get over that and clear this wick, then the next logical point would be opening price level. And man, how many days, we talk about this in the private room, how many days, no matter how big of a move up or down that we get, how many times do we eventually come back at some point in the day and test opening price level? Isn't it amazing? I mean, I'm not saying it's going to happen today, but it happens a lot. That's why we market. It's important. That's one of the reasons we market. We market for a bunch of different reasons, but it happens so often. But right now, the crucial point is to try to clear the top of this wick right here. If we clear that, then just look over here. There just isn't really any resistance up till opening price level, and that's more of a psychological resistance. Psychological. Let's go back to the 30-minute. Okay, here's where we opened, right there. Okay, went up and then we flushed down, right? So now as we're working our way back up, here's that wick on the 1 hour. If we can get by there, you see, come right back up here, and there would be, the top of this candle would give us a little bit of resistance. So far, we haven't been able to get through 27.52 though. Now it's selling back down. Okay, so you got that in conjunction with this wick right here is causing some resistance. So you guys know what to look for. Thank you so much for joining us. Again, make sure to give us thumbs up on this particular live stream. And I'll post this on Twitter once it uploads to YouTube so everybody can have the link. They can rewatch it again if there's something in there that you wanted to slow down and kind of get into deeper. And definitely check us out, simpletradinglife.com. Come to our room. Definitely check out the free room. Okay, and then if you like the free room, maybe you join the premium room. That's totally up to you. But thank you so much. We'll see you later. Bye-bye.